Welcome to the Final Bar. I am Greg Schnell, the host of the show. This is the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. I have lots to cover off today. The Final Bar is going to be a very busy show with lots to go through. I want to get through the transports a little bit this week. They're all nice and high. I want to talk specifically about that. I want to get into understanding parabolic moves, and the reason for that is recently we've had a big push to the upside in the marijuana names, and today some of them fell dramatically. But I want to talk about parabolic moves and how to analyze them a little bit. And of course, there is no right way to figure out the end of a parabolic move, only that you're in one. And then U.S. markets continue to surge, and Canada forgot to. And that means something for us, I think, on a bigger picture. And then the macro picture, I just briefly, if we get some time, I want to work through a little bit of the foreign charts and just show you what I see in there. So let's jump over, and what I want to show you on the transports is that we have this huge channel that's going, and we're right up against the top end of the channel, and that's, I mean, we're testing this 11,423 high, and this is 11,475. So, you know, is there a place to expect resistance? Who wouldn't map it at the January high? So that's a bigger one for us. You can see that we got a sell signal today on the transports, and so to me that's something worth watching. Just in general, they've been pretty moody. When the transports rolled over back in January, that was an important place to be aware of. Even in the June high where this pulled back, the S&P wasn't strong through the June-July period, but it wasn't doing that, that's for sure. Anyway, so just want to cover that kind of stuff off. Now here's the airlines, and this is a really interesting chart. I noted back in May 2017 that Warren Buffett was adding to the airlines, and basically it ran for another 6 weeks, but you can see it's almost been dead money for a year here. Hasn't really gone anywhere. One of the things that's interesting is the break in the relative strength trend line on the airlines, and they had a pretty nice week. I'm a little bit cautious here with this big push up. I'll call it a week ago, and then today we came up, tested the highs, and it looks like we're rolling over here. And you can see this area has been an area of resistance for a while. So if we just pick this 290 level, it was resistance back in March of 2017, a brief rally a little higher, and then literally a couple of days and it all fell apart. It was a resistance point here. Then we spent almost a month going higher than that, fell apart in a couple of days. And then this push back in March made it up to 295, so not a big difference, but a little bit higher than 290. And here we are with our recent high at 287. So I think this is a pretty valid level. But the important thing here is the relative strength trend line is starting to break out. Now, that doesn't mean it won't just roll over. I think one of the bigger concerns, if we had to pick one, was just that we're still on a declining peaks mode, and that would be something to be watchful of. Okay, getting into the railroads. And the railroads I like particularly as a guide for the overall market. I've mentioned this before. And the one thing, if we open the chart up, so this is to 2014, we see this big kind of topping structure here on the railroads back in 2014. And literally the first high on the railroads, and then it made lower highs on the subsequent one. So it wasn't like it gave us a head and shoulders top. It basically crested and then rolled over. So what I'm looking for here, though, is probably more important that the relative strength trend holds up. And on the actual transport chart, you know, I'm looking at 2050 as support now, this big upward channel that goes back since the 2016 lows. One thing that's interesting now is we're living on the bottom half of the channel, whereas in the beginning of it, I would just say that I would probably draw a line on a little bit on the lower side, and because we only had two brief touches down on the lower side. Here we've got a whole bunch of touches on the lower side. So I would say the trend is still strong, but not as strong as it was when it was initially kicked off. So at this point, still watching it. There's a trend line that can be drawn off these highs, and it comes in pretty close to here. But the bigger picture, I think if we just zoom out, this 2-year trend going on almost 3 years now is probably the one to watch. So anyway, the railroads are right up against the top of this channel, and it wouldn't surprise me that we get a bit of a pullback. It doesn't mean we've topped out. It just means that we've rubbed up here for a month now, and perhaps a visit back to the downside, because we've had declining momentum for the last 3 weeks on the railroads. In January, or in June, we had that, and then all of a sudden it kind of dropped to the bottom side here. I just think it's an important place to watch. Okay, trucking. What we see on the trucking chart is this topping structure in relative strength. So we've already broken the uptrend line here on relative strength, and you can see we're visiting the 200 period moving average, but we have the declining peaks here in terms of the MACD. Now, what I want to show over here is we also had that same condition sort of setting up in multiple places. We had it here, and we also had it here. I think it looks, these two big surges look a lot more like this one. And so what I'm watching for is, we have a horizontal neckline here. I would probably pick the common spot around 800 just to use a guide. That would still put us below the 200-day moving average. But looking at that, looking at the transports for advice, I would say they're at the top end of the range. We got a sell signal on the momentum on trucking today, and it's right in tune with this downward sloping momentum trend line. So I'm expecting the transports to roll over here and probably come back, or the trucking to come back and test the 800 level or 825 level, and then we'll see where it wants to go from there. But I think the most important thing is, right in here, we made new 4-month lows in relative strength. This was 6-month lows in relative strength. And if we start to make bigger lows than that, I think we're probably in for more of a topping structure. And usually when the transports top, something like trucking, especially in such a bullish economy environment, I'd want to use that as a guide. So anyway, just some things to watch out for. Not predicting doom here, just mentioning that we're up near the top of the range on these transport stocks. And if they pull back, that would be a time to start watching. Okay, the next chart I want to point out is one I used at ChartCon, and I want to cover off a couple of things. So first of all, if we look at Goldman Sachs chart, broker-dealers are considered to be a leading industry. And the one thing, if I zoom out on this, or zoom in on this chart to just the last 3 years, just to pick a number, what we see here is we've got this declining PPO strength, and we've had a dip below zero. We've had a brief rally here, and we're rallying up, and right now we're around the 40-week moving average. Doesn't have to be the 40-week, but we're above the 10-week and we're below the 40-week moving average. So I think that's important. Now, if we roll out to 13 years, and the reason is that catches our 2007 top. But the point I want to make here is, when Goldman Sachs goes below zero on the PPO, it usually gives us a nice warning sign. So in this case, it went below zero, and you can see then it went on its final thrust, made its final high, and rolled over. And then after coming below zero, it couldn't get back above zero, and you could see that's when we really started to fall, and we were below the 40-week moving average as it rolled over here. So we have that same sort of setting up right now. Now, if we look in 2010, we went below zero, and then as we came back up, we rolled over, and we actually made a back above the 40-week moving average. But what I'm noticing on a lot of these charts is usually the first move below zero kind of makes us start to wonder about where we're going. So in this case, it's rolled over, and then we ended up having a big slide in 2011. Now, over here in 2007, we could have drawn a line under here and called it a big 2-year head and shoulders top. Well, we're about 18 months in, maybe 20 months in, on a kind of a triple top here. Now, we all know that the market rolled back in 2015, 2016, and we have that same sort of 3-bump show on Goldman Sachs. And the difference, or the same thing happened here, where we dipped below zero, rallied up, couldn't get back above zero on the PPO, and rolled over. And that was kind of really pulled down hard. Now, again, the overall market topped in March or May. So Goldman went on to make higher highs and hadn't really set up a topping structure. The difference, I think, now is there is a a potential for a topping structure. In this case, the neckline would have been 160. Over here, the neckline would be 220. So I'm watching Goldman Sachs, and it doesn't have to be a clue for the market, but typically the broker-dealers are a forward-looking device. So I'm watching to just see how the market behaves here. Now, if it breaks out here, that's just very bullish. And again, all of our indicators started to really surge in the last 2 weeks, so that's a good thing. But we, just because of a lot of these setups with negative PPOs and things like that on the charts, I think it's an important place for us to consider. So I want to continue to be bullish, but again, being aware of, if you're starting to see these broker dealers roll over, and we'd go look at Morgan Stanley to see if we got the same sort of behavior, maybe some of the others, but the idea being, we're down here with a very low full stochastic, and if it bounces from here, great, that's always bullish. And I mentioned in my ChartCon presentation using the Goldman Sachs chart was that, this is a place to enter with a nice oversold signal and you get the move up. And if you don't get the move up, that's probably a bigger signal, so much like in here where you fell down and then couldn't really get a big move up and then rolled back over. So when you get these signals with the PPO below zero, you want to watch. So in this current case, we're at minus 1.7% for the PPO. That's not huge, but it's still worth watching. And you can see in 07, it got down to zero and then fell apart. In 2010, got down and kept falling here. Brief rally back above and then fell. Up here, it stayed above it for 3 years. In 2015, it started to go below zero, and then the rollover in end of 2015. So here we sit, the PPO's gone below zero, and what we don't know is whether we're just going to go lower or whether we get some sort of a rally in here. But so far, a negative PPO on these broker-dealers has been a good warning. Again, we don't want to get overly bearish. We just want to be aware that some of the conditions are not as ripe as the all-time highs on the index would suggest. So still long, still investing, but the real question is, how long will this last? Okay, so the second thing I wanted to cover off was the parabolic moves. And the reason I want to cover that off was that recently we had the marijuana stocks really surge. And on the surge, so as an example, here is Canopy Growth Corporation. So the ticker symbol in the US is CGC, Charlie Gulf Charlie. And as we wind to higher highs here, one thing I wanted to point out is that this breakout here was like a 7-week surge, and then the market pulled back for almost a year, 8 months, whatever. Here, this breakout from a shelf was like 4 weeks, and then we pulled back for 4 weeks and then didn't do much. So we've just had a 3-week breakout, and I don't know if we're going to get another one. One of the things that makes the marijuana area hard is this chart was actually when Canopy Growth was traded in Canada, and it recently started trading in 2018 in the US on the New York Stock Exchange. So they put the trading history from Canada on the chart. So if we go see CGC, so Weed.to actually did trade, but here is the Canopy Growth Corporation chart, and you can see even though we started trading here, it shows a lot more history. So the point I want to make is that this sudden surge, and it was 25 to 50 bucks in 2 weeks, kind of makes you want to be careful when you're getting 100% growth in a stock in a couple of weeks. Now, I get it, it could be a really big growth industry, but one look at the volume candles, again, these are weekly candles, suggests, the average week is 22 million shares, and we traded 73 million so far. We need an extra day this week, but we were over 100 million last week, and the prior week we were at 70 million. So that's, 3 times the moving average for 2 weeks ago, 4 times the moving average for last week, and we're already at 3 times the moving average this week. Normally when you get those big volume surges, those are an important place to watch. So one of the clues in parabolic moves is volume. And again, they'll always surge. So that's fully expected. I think the real question has to be, how do you know where you are in the cycle? So I've put up some other charts here. I've pulled up, this was the one that happened today, Kronos Group, and whatever, the short sellers came at it and announced that, the accounting was this or that or whatever. But the volume was already coming into this thing in a massive way. So this thing had an EMA of 13 million shares, and I can assure you, up until a week ago or 2 weeks ago, the moving average was around 2 million. And then all of a sudden, today we traded 80 million shares. So, a 40-fold expansion on the volume probably suggests you might be in a parabolic move and when we look at it back here, this is hard to even tell, but just because of the size of these, maybe what we should do is just change this chart setting, go down and pick select start and end. And what select start and end allows you to do is pick the date range. We could just take off the last few, and now all of a sudden this volume doesn't look so small. But you can see over here that we still had a massive surge in volume compared to what you're used to. So if we just line up the end of this with 2017, and so the volume looks pretty big at 600,000 shares a day. And then we kind of roll a little bit, and you can see we added up to 2 million shares, and now the 600,000 looks pretty small. And as we keep rolling over, so again, the volume expansion makes it look pretty significant. So this was a big one. Then we had another surge, and the volume shot up to 12 million. We thought that was big. And again, if I bang it right to the end now, you see we're up to 80 million. So these little surges that we saw back here look insignificant. The point is when you get this parabolic move, and again, this is the month of December to 5 weeks total into the first week of January, and the price went from $3 to $12, call it. So a fourfold increase. And over here we've had $5.60 to $12.80, at least a double. And so you have these sudden moves, and again, this was only 8 days long. But one of the points I want to make on these parabolic moves is when you get them really strong and the volume starts to super surge. Now, you might have said that about the first 2 days, but the point is as the stock starts to break out and continue to rise up, it's important that you're trying to figure out where to take profits and not just continuing to assume that this thing will go ballistic for another threefold or fourfold. If we look at something like Bitcoin, and this is the Bitcoin index, what we saw back in September was it was $3,500 and it went to 18,000. So this is a fivefold increase in a couple of months, roughly 3 months. And as it did this, it was roughly a month ahead of the marijuana ones. You might remember that other chart topped out in January. So these rolled up pretty significantly, and then it's been pulling back for almost a year. But in here, this move was from 7,000 to 11,500, which is, a 50% move or something. These are really significant moves and make you think the thrust has started again. My main point in covering this off this week is there's a lot of people trying to trade the marijuana names and trying to trade the Bitcoin names. There's a whole bunch of things to look for, but on this chart here, you'll notice that the PPO was positive the whole way up. In here, now we're starting to make higher lows, and it looks like this low is actually going to be higher than the previous low. And now, but we're still under zero. So until we start actually breaking out above the previous highs, we really have to be careful. And even these highs, so this was higher than this, and this was higher than this. You still don't have a lot of momentum here, even though it started to turn up. Now, you can still buy the trade or take the trade. 6,500 to 7,000 is not a bad move. The big issue you're trying to solve is using shorter term momentum, obviously like a 3-day chart or a 5-day chart or something like that, to keep you in the trade as much as you can handle. But you do not want to let this thing fall. And in this case, this was a 40% drop in a couple of weeks. So as soon as the thing unloads like that, very difficult to expect it's going to return. Now, I will say, you know, even in here, like these 10% moves in a day or two really start to add to the difficulty to trade them. This is going back to gold in 2011 and 2012. And back in here, we were starting to see some moves where some of the gold miners were moving 10 and 15% a day, and gold was gapping up and gapping up, and a big pullback for 2 or 3 days, and then went on a gap. And you get these exhaustion gaps. And as you get these, how do you know they're exhaustion? Well, it's literally when something has been on a parabolic move for 40 days and all of a sudden goes gap and gap, you know, we should be expecting some sort of exhaustion. So typically in technical analysis, we note a couple of things. We notice breakout gaps like this one and this one. And even in here, this is a gap. And then here is another gap. And then here is another gap. And we continue to build rising lows. But the real thing that happens here is look at the volatility just shoot up as this chart changes. So I'll zoom back in so we can get the scale. 157 to 175, you know, just massive moves in a couple of days, and then a pullback for a couple of days, then massive moves for another week, and you get these big gaps. And with it, the volume starting to really come in heavier than we've seen before. And then all of a sudden you get this massive pullback. Those are the couple of red candles in there. And then you drive back up and you try to take out the prior high. Momentum's giving up. There's no volume as you go to the second high. And what you want to be careful of is like this gap right in here is kind of saying, yeah, I've got more energy, I'm going to surge away again. And then all of a sudden nobody shows up to buy. And this thing literally unwinds very, very quickly. So when we look at Canopy Growth Corporation or something like that, this is a weekly chart. We'll just switch it over to daily. And the point I want to make is in here you get these exhaustion gaps or these breakaway gaps from a trading range, and then they shoot up and then build sideways. And here it's just surging up and up and up. And this is $15, no big deal. Well, in a week, you're at $30. Now you're starting to have, you know, $6 swings, $5 swings, pretty big. And then you run up to $30. Now we pull back. And you can see the volume in here is really starting to accumulate, obviously, with this big pillow over here on the right. It's hard to see these. But the point I want to make is one of the clues when you get into parabolic moves like we recently had here is volume. And I think it was last week where Jim Cramer said, you know, if you're going to trade a weed stock, it should be Canopy Growth. And literally the stock breaks out and explodes to the upside. The problem on Canopy Growth, and I don't know how it's going to work out, but this doubling should give you a clue that obviously the anybody who wanted in should be in by now. And with when we look at the bigger picture on the chart, this thing broke a downtrend, rallied, then did nothing for 6 months, then made a big rally for 2 months, then fell down for, you know, 4, 6, 8 months. Here it rallied for 3 or 4 months, and now it just briefly started to rally. So it makes us think that we want to get involved now. I think one of the problems is this volume accumulation is so big, it's very difficult to believe that with this sort of volume structure that anybody who wanted into the stock isn't already in it. So who's your next buyer? Like Alexander Elder has some great expressions around finding somebody stupid to buy it after it's already made a 100% move. The point is, when you see this big surge in volume, we need to be much more careful. And so going back to Kronos Group here, now this was a short seller coming in and literally taking the stock down from $13 to $9. So, you know, a 30% move or something like that, $4 on 13. it is just massive. And so if they were short the stock, they made 30% in a day. Now they could cover today and be happy. But the real question, what I like to look for is I like to go in here and then look at the rest of the marijuana stocks. So in this case, view all. And we're going to go to the candle glance view. The point I want to make on these is they didn't all give it up today like Kronos Group. But the real question is they're all near previous highs. So it's a very important place to watch, especially with the sudden volume acceleration we've had. And so I would encourage most people who aren't familiar with parabolic trading to go back and find some parabolic charts and try to figure out when you'd get short and when you'd get long and when you'd get out and when you'd get in, because it's not as obvious as it looks. And a lot of these charts are testing prior highs. And if they break out, you know, that's very comforting. The problem I have is they've broken out on massive volume, like exploding volume where it's doubling every day. And that is typically not associated with the beginning of the move. Usually you have a one-day huge candle, and then the volume returns to normal, but the stock might continue to climb. In this case, we've seen exactly the opposite. We've seen absolute lemming sort of moves where everybody's doubling in based on the day before, and those just don't end well. So with that, I think one of the bigger things to be concerned about on these marijuana moves is, as a trader, how are you going to handle your entry and exit and making sure you have a plan for the exit? Because the problem is the relative move is quite short, but the size of the move is huge. So your time frame might be 8 or 10 days and you're getting a double, or 3 days and you're getting a double, and not to get too greedy and try to catch whatever 475% of the 476% move. Take your 100% out of the middle and enjoy the move. But people who stay too long get this Kronos sort of move. Where is it? This sort of move over here, where it just literally collapses 30% in a day, and you're still trying to trade the stock. Okay, we're not going to get a lot of time to cover things off, but I do want to point out one thing. On the weekly, the Canadian market has rolled over again. And in January, it had rolled over pretty much on time. 2017 rolled over at the beginning of the year and just kind of relaxed the whole period. But we do have a sell signal building on this chart, and we'll see if it holds for Friday afternoon tomorrow. But I think just being aware that some of the other markets around the world are starting to close their PPOs on the weekly chart, and it's just a place to add a little more caution. Again, not all charts are doing this, but I think if we just grabbed whatever, here's the Shanghai Composite, and this is threats of more tariff. I mean, this chart's pointed straight down in terms of momentum. If we go to, here's the Nikkei, the momentum here is trying to, it's tilted down here. We'll see if it's got enough power to turn up. This is a pretty important place where it made your resistance. This looks a lot like the S&P 500 before it broke out. So just keep your eyes on some of these foreign charts and see if they can continue to power higher, or do they break down right now? Because usually the foreign markets will break down before the US market. And here's Germany, and you can see the PPO is below zero. So with that, just a broad snapshot, I would say enjoy the ride up, continue to enjoy the ride up. If you're in these parabolic move stocks, you really need to figure out how to capture your profits, and that's going to be much more important than trying to make sure you got all 300%. Just take your 100% and move on with a couple of years of annual gains in a few days. So with that, thank you for joining us on today's show. The Final Bar airs live on Thursdays at 5 p.m. Eastern. It can also be found on the StockCharts TV schedule at other times during the week. In addition, look for it on the StockCharts YouTube channel. And with that, have a great week and good trading.